Hello and welcome back to the Founder Files. As you can tell, today we've got a very special episode for you all about acquisitions, but I want to tell you the context as to why we've done this episode. So about 4 weeks ago, recorded an episode with a founder, an award-winning founder of 2 startups. But the interesting thing is between when we recorded versus when we're now meant to release, one of his startups actually got acquired. So, staying true to the nature of the content that we create, I wanted to make sure that we had the most updated and real story about what's happened with this founder and what's happened with this startup. And obviously, any exciting exits, I want to be able to share the story and the context behind that. So, we've decided to pivot and adapt, and we're going to re-record that episode. But instead, in order to create a little bit of anticipation, but also get into what this podcast is all about, and that's practical, honest insights and lessons from founders that have been there before, is we've decided to put together this montage episode of a couple insights and stories from the buyer side, the seller side of the acquisition. And so what are the things that they wish they knew before going into the deal? Whether they were buying, whether they were selling, insights about how to go about structuring a deal, or when the deal is concluded and the transition happens, how to go about handling that. So whether you are approaching your first exit, whether you're approaching your first acquisition, or this is something that you're just curious about, this is the episode for you. So let's break it all down and let's get straight into it. Welcome to the Founder Files, the podcast that's like eavesdropping on a conversation with a successful entrepreneur over a fireside chat. Join me, Cameron Coots, through this unique experience of unfiltered stories and insights from scaling founders around the globe as they share their ups, downs, and everything in between. So we've spoken about 2 very critical, I'd say, catalysts in the journey of Nona now. The first time implementing scaling up, and essentially that helped prevent you from being insolvent. And then the positioning work that you did. It sounds like from there, I mean, obviously you mentioned the fact that you were able to 4x your pricing, you were now being a demand generating business, and the fact that you had like control of your pipeline, you're in this fantastic spot, right? I think just saying that out loud I was like, if I want to potentially acquire a business, do I want to do it when it's potentially insolvent and the founders all drunk around a table wanting to implement a book? Or am I going to do it when they've really figured out their positioning and, they are making money hand over fist? I think probably the latter. So what I want to know is, from that journey when things started looking really exciting, when did Yoko come around and how did that happen?
Yeah. So we were a services business, right? Services businesses in general are terrible business models, right? You are selling time for money. I want to just be clear about this. It's a terrible business model because it's not scalable. It doesn't mean you can't build a great business with great people and make a lot of money, but it's not a good business model because the only way you grow is putting people into the machine. That's not scalable, right? So what we sort of realized was our business model was like a 2 out of 10. When your business model is a 2 out of 10, it's just necessary for survival that your execution is really excellent. You can't be bad at execution when your business model is bad. You just can't. You just don't have the freedom because your margins are tight. There's no scalability. There's not zero marginal cost. You just have to be good at execution or you die. It's just that simple. So we had a terrible business model. We didn't know this at the time. We also didn't realize it, but we were actually exceptionally good at execution. One of my co-founders, Ed, particularly, is an absolute machine and was largely the reason we were so good at execution. But that was just a fact. Business model rubbish, execution has to be good. So business model is a 2, execution has to be like an 8. And I think our execution got to like a 9, I would say. We got exceptionally good at execution, but it was still a bad business model. Okay. So what does a services business do when they realize this? They generally go, we need to get into product. We're making money by building product for other people. Surely we can just build our own product. Not quite that simple, right? I won't go down on a tangent on this, but anyone who thinks that they have anyone who has a services business right now that wants to get into product, stop calling it a product and call it a second business because that's what it is. There's no such thing as building a product. Mm-hmm. There is a thing of starting another business that is a product. It's going to need go-to-market. It's going to need leadership. It's going to need resources. It's going to need to have separate IP. It is a business. Don't make the mistake we made of thinking it's not a business. So many false starts on this. Generally what would happen is I would find myself at 2:00 in the afternoon having done no work on Nona because I'm just working all this time on this product. It's not a product, it's a business. It's a distraction. So we failed at that. We did not get that right. We did not get the move from services to product right. We tried a few times, failed dismally, stopped trying to do it. So then we were like, well, we're a services business, and if we want to exit, we're not going to get a high multiple as a services business. How do we get a strategic valuation, right? This was a strategy that happened way quicker than we expected, but basically, long story short, and again, I'm paraphrasing something that took years to figure out. We were a bit slow. Hopefully, you're faster than us. But we sort of had this belief that was like, okay, our best chance of reaching a strategic valuation is to have a client that is extremely well-funded. Most of our clients were at that stage. Most of our clients now have raised lots of money, and often over many hundreds of millions of dollars. Becomes so valuable to that client that it just makes like perfect sense for them to acquire us, that they almost like can't not acquire us, right? And that way we have a better chance of getting a much higher valuation. This was not like a set strategy. It was just like conversations we had that made sense. It wasn't like, there wasn't this war room scenario where we were like, yes, that's what we're going to do. But it was a general sentiment in the leadership of the business. Like, this is kind of what we're going to do. I mentioned to you earlier that our target client was very, very, very difficult to get to. We figured out a way to get to them, which worked really well. It was really neat. We started a podcast. We started a podcast called The FinTech Founder Journey. This podcast, I didn't care at all about the guests. Apologize if any of you were listeners. I didn't care about you as a listener. I really didn't. The only reason we started this podcast was we played into the human ego. If I messaged, who's an example? I don't know, Anthony Delorio, co-founder of Ethereum. And I say to him, hey man, we're a software development company. Can we talk to you about doing your software? I mean, about a 0.5% chance that he even responds, right? However, if you send a message to someone saying, hey Anthony, amazing on the most recent update of your business or the raise or the product, well done. I'd really love to interview you to get your insights and your story on building Ethereum. Would you come on the FinTech Founder Journey podcast? Here are some of the other guests that we've had. 9 out of 10 people will say yes, right? Because we all like to talk about ourselves. We do. So we had this amazing channel to these incredibly difficult to get to people. I got Fred Shabesta on there, Forbes Rich List, co-founder of Finder.com, co-founder of Ethereum, top VCs, founder of EO. I mean, I got a senator on the podcast to talk about blockchain regulation. Like, it was just so easy to get people to come and talk about themselves. I'd research the hell out of them, and I would really make it a good interview. Like, I'd put a lot of effort into it to give it a good experience. But an amazing thing would happen in this podcast. 1, I got to speak to them for half an hour as a prep and build rapport. But 2, when we were recording, if anyone's been in a podcast, you'll know how it works. Please close all windows. Please put your phone on silent. Please make sure there's no distractions. Please be fully dialed in. You never, ever get somebody fully dialed in. But when you're recording a podcast, you do. So most podcasts top and tail their podcast with a pre-recorded intro and a pre-recorded outro. I didn't do that. I would read my intro because my intro was basically an elevator pitch. So I would have their undivided attention. They didn't even know that they were being sold to. So they were very open. It was very subtle. And I would just talk about for 30 seconds what Nona did, credibility, and what we specialized in. And obviously what we specialized in was a type of company that the target guest was a part of. Then I would interview them. I would be very well researched. I'd make it a really good experience. I wouldn't sell anything. A lot of them would go, what is it that you said you guys do? Oh man, we must talk, right? So we had this podcast that was hugely successful from that perspective. Got a lot. It actually did very well from a downloads perspective, but genuinely, I didn't care about the audience. Like I didn't. It was just about the founders. The audience helped to get founders on. If I said, hey, we had 10,000 downloads, that helped with credibility, but that was the only reason. My current podcast, different story. That's all about the listener, not about the guest, right? To illustrate my point, the day we sold Nona, we killed the podcast. It had a job to do. It did the job. It's done. It's gone, right? I think they're still on YouTube, but it's not hosted. It was a tool. So coming back to the Yoko story, I got Lungi, one of the co-founders, CTO, a very cool guy, onto the podcast. We kind of knew each other, but not really. Had a really good interview. He's a super impressive guy. And almost needless to say, off the back of that, we started doing work with him. right? It was just such an obvious fit. They're local in South Africa. We were there. We kind of knew each other. We had a good reputation. We started building stuff for them. That team grew and grew and grew and grew to the point that it was almost becoming a bit of a client concentration risk. We've been there. It's scary. We didn't want to be there again. Just a quick anecdote, a side story. At one point, we had more than 90% of our revenue coming from one client. That was a scary place to be.
Yeah.
Try not to be in that position. It wasn't Yoko. It was a US client, but that was not a fun place to be. That team grew and grew and grew. Eventually, sort of the conversation just accelerated really, really fast. They had raised a lot of money. They had a talent problem. The talent market was at an all-time high. It was incredibly difficult to find talent. Funding was very cheap. It was just a perfect storm. We got very, very, very lucky. I'm not really allowed to talk about the numbers and things, but we got a valuation that we definitely wouldn't get today because the market has changed considerably from a capital perspective and a talent perspective. We wouldn't have gotten a year before that. We got exceptionally lucky with the timing of the market. We acknowledge that, but it just made a lot of sense at the time. So we were acquired at a valuation that is far higher than we would ever have got in an ordinary multiple of EBITDA. Like it's like so much higher. And it was because of the positioning. And it was because of the lever that we figured out to pull to get to these difficult to get to people. And it was about using language that appealed to them, not us. And we got an incredible result. I can't stress enough that there was an element of luck, 100%, 100% pure and utter luck. However, luck is everywhere, guys. It's everywhere. You need to be ready to capitalize on luck. You need to be ready to move quickly. I mentioned earlier that we had a data room way before we needed it. What I mean by this, when they were doing their due diligence, they were like, hey guys, sorry, exhaustive list. Do you think you could get this back to us in, I don't know, I think they said 2 weeks. Jared was like, give me 10 minutes, I'll share the folder. What the hell? What the hell? Why do you have this information? Who else is looking? Right? So yes, there was luck, for sure, 100% luck, but we were ready to capitalize on it. So if you're listening to this and you're going, oh, that was lucky, it was lucky. My question to you is like, luck is everywhere, all the time. How do you ready yourself to capitalize on luck when it comes? That's a big question to ask yourself. Like, what does being ready to capitalize on luck look like? What kind of luck? Where does it come? What would we do? These are important questions to ask yourself, depending on your stage. So they acquired us, very interesting deal. I'm not really allowed to talk about the detail too much, but it was a very unconventional deal. Happened really quickly. We sort of dissolved the business, handed all of our clients over to other providers, and the rest is history, so they say.
Reminds me of another quote that I really like is that success is where preparation and opportunity meet. So,
yeah,
Mike, you've now exited Nona, right? And now you're working as the head of partnerships at Yoko. What was that like to now go and work for someone else for the first time? And specifically, the people that acquired you as well, whilst still having your entire team now move over into that business. Like that must have been tricky.
Yeah. It wasn't great for me, and that's no disrespect to anyone, any business. It was circumstantial. So when we were doing the business, it was really, when we were doing the deal, it was really easy to track where every single person was going to go. Right? They were acquiring effectively the talent in the business and the capability. My role at Nona was effectively two things. It was leading the leadership team, so leading a very, very competent, smart, capable leadership team, and getting the most out of them, which is a very difficult thing to do, but I love that, and I love those people. And the second one was effectively business development. We never solved outsourcing business development. I tried very hard to get other people to do it. It just never worked. So I was kind of responsible for business development and leading the leadership team, right? And in there is wrapped up in strategy and culture and all that stuff. Everyone was easy to map over to Yoko, really easy, except me. And when we were doing this process, I said to them, and I think they thought I was being falsely humble, I said, I don't think there's a role for me at Yoko. I want to come, but I don't know what I'm going to do. Like, I'm not going to be the CEO. It's not going to happen. I don't have those capabilities. I've never done anything like that. I'm not going to get into sales because it's a very different kind of business. It's a product company. It's got nothing to do with the kind of business development I've done. I'm not a developer. I'm not a designer. I'm not a product lead. What am I going to do? Like, honestly, what am I going to do? I've never worked in a company before. I've never been employed in my life. As Cam mentioned at the beginning, this was the first time in my life I'd ever signed an employment contract at 40 years old, right? I don't know how to be led. Okay. I was excited about it, but I don't know how to do it. So it wasn't great. They generously created a role for me that didn't exist before and doesn't exist now. So once I left there is no head of partnerships anymore, and there wasn't before. It wasn't clear to me, not through any lack of theirs. The business has gone through a lot of change. If you follow the Yoko story, I won't talk about it, but it's quite public, so you can figure out what's happened there. It's an amazing success story with lots of change. So it wasn't great. It also wasn't great for me because I'm in Australia. It's 5:45 in the evening now. It's morning for you, Cam. It's one thing leaving South Africa with an established team, an established business, an established culture, and going to then leave and go and carry on from Australia. It's a whole nother thing starting and trying to lead people you've never met and integrate into a company from Australia with an 8 or 9 hour time zone, other side of the world, very different energy cycles of the day. It was really not pleasant for me. Like I was on calls, my day would kind of start from a calls perspective at like 3 p.m. and I'd have like 5 hours of Zoom calls back to back into the evening. I've got young kids, not fun, like not a good fit, right? They tried very hard to accommodate me. Like I'm very grateful for that. They were very generous. It wasn't a good fit. It wasn't a good fit. So tried very hard, built a small little team in the partnerships area, very cool people, a small team of 3 people. Long story short, I couldn't travel either. So I only met the founders of Yoko, the guys who acquired our company. I only met them a year and a half after the deal concluded. It's just a bizarre situation. Like I'm 6'5", and it was just weird because like when they met me, they're like, Jesus, I didn't realize you were so tall. I've only ever seen you on a screen. Like, what the hell, man? Like I must have heard that 200 times when I went to the office. Like, oh my God, I didn't realize how tall you were. Like, and it's just a weird thing, right? Because it's like, you don't know each other really.
Yeah.
You've had every interaction over a screen. It's kind of shitty. Like you never actually hung out with these people. So like the first time I went to planning, very graciously and a very amicable situation, we sort of decided, this very, very amicably, and they were super generous with how we separated everything. We decided, look, that, probably isn't a good role for you here. We spoke about a different role. They wanted me to join sort of the senior team potentially in a totally different role, but immediately we were just, Lungi and I were talking, like, look, that's cool. I can see that value, but no ways I can do that from Australia. And they were like, yeah, we'd want you to relocate. And like, I'm not going to relocate the family. So we sort of said, well, I guess we're done. And it was super amicable. They were way more generous than they needed to be. And I wrapped up everything in November. So, a little sad that it didn't work out because I wanted it to. And that was hard for me to accept. And I don't feel like I actually experienced Yoko because I just spent far more than 90% of my time on the other side of a Zoom screen where actually I wanted to immerse myself in that culture, and they built an incredible business. I mean, that story is just out of control, impressive with what they've achieved. But sadly, it wasn't a good fit. So that brings us, that brings us to today where, the deal is done. We are exceptionally grateful and lucky to have gotten that timing so right. It would not be the same deal now because the markets have changed considerably. Money is a lot more expensive. The talent market has cooled off considerably. You all know about the layoffs that have happened across pretty much every tech company in the world and continue to. So, very lucky, very grateful, great commercial outcome. Acquisitions are difficult. It's very difficult to integrate one company into another company. I've learned a lot about that. Don't know what I would do differently, but I've really seen a different side to these things, which is very interesting. It's also been amazing to observe a high growth company like Yoko at that scale and having quite a close sort of connection to the founders, especially one or two of them, to observe that kind of massive scale firsthand. That's been phenomenal. And I'm kind of left today with a pretty clear picture of where I fit very well. I'm not a big business guy, and I'm okay with that. I'm not a multi-100 person business guy. That's not actually where I thrive. I'm a small and mid-sized business guy. I love working with founders and leadership teams and on businesses that are like 10, 20, 30, 40, 50 people, that are growing, that are tight feedback loops, where things are still small and tight and fast, and we can affect change and it happens really quickly. I'm not a big business guy, and that was actually really useful for me to realize that because I didn't know that before. Tons of learnings, some very smart people there. Did it go exactly how I wanted it to? No, but like nothing ever does. Would I have changed anything? Would I still have done it? Absolutely, it was the right thing to do. Like 100%, that was the right thing to do. No doubts, no regrets at all. But everything can be done better. And acquisitions are difficult. They are exceptionally difficult. Pulling off an acquisition and an integration from one company into another company is so multi-layered, so nuanced, so many cultural things. It's an incredibly difficult thing to do. And I think it's left me with a newfound respect of people who pull off these M&A deals successfully and how incredibly tricky it actually is. I can't speak too much about the detail. It's just not okay to do that. But yeah, it's amazing experience. And I think, was it never work again money? No, because there were multiple shareholders in the business. Was it a significant valuation? Yes, very significant, especially in Rand terms. But it feels like a beginning, not an end. So it's kind of every entrepreneur's sort of dream to build the business, scale the business, exit the business, be acquired. It's an amazing end to the story. It feels incredible that with some of the people I love the most in the world, we went to war together, suffered incredibly together, and had this incredibly positive outcome where the story ended very, very well. Do I feel that this is the highlight of my career and the biggest thing that'll ever happen? Absolutely not. Do I want to start another business from scratch? Probably no. Do I want to join an existing business or invest in a business or buy in a business with people that I want to work with? Probably yes. So weirdly, actually, the takeaway from me from this is don't start another business. Buy another business, join another business, help another business go from good to great. Which interestingly, when I was interviewing Vern Harnish, I think it was actually off the record, I said to him, what advice would you give, a new entrepreneur to start a business? He's like, don't start a business, buy one. This is the guy who wrote Scaling Up. This is the guy who started the Entrepreneurs Organization. He's like, I'm not even kidding. Don't start a business. It's too hard. Buy one and take it from 1 to 10 or 10 to 100 or 5 to 20. So yeah.
You acquired a business, right? I don't think many startups do that when they're still a startup or even a scale up. I think the main place that acquisitions usually happen is in M&A, in private equity, or in medium to large companies. So I'm super fascinated, and it was the company's called Back the House of Both Corporate Services. Tell me about just that entire decision. Where did the idea come from? When did you decide to actually take the leap? How did you merge them in? Tell me the whole story of that.
Sure, I'll try to be brief. Again, one of the unfair advantages we have is that we've got a number of senior corporate lawyers on the team who can be quite creative in the way that you structure something like an acquisition. To your point that you're making, the assumption would be that most early stage companies don't have the cash to go and acquire other companies, which is broadly correct. But you can structure things in certain ways so you don't kind of kill your cash pile. Obviously, provided the counterparty is keen on the deal. Both was a provider of company formation and management services, very well respected company, and our ideal customer profile, or ICP, is a business that needs to set up a company or a holding company in one of the 5 to 6 jurisdictions we address. These are all, as I said earlier, common law jurisdictions that investors prefer to structure their investments through. So, of course, places like Delaware, but also Singapore, the Cayman Islands, Abu Dhabi Global Market, or ADGM in the UAE, which is an English common law jurisdiction. And both was operating from ADGM and had a very strong roster of clients that they managed the holding company for, so their fundraising vehicle. And after a few discussions with the founder, we agreed terms on the acquisition, because if we can kind of control and manage the company, it's very easy and natural for the owners of that business to be introduced to our other suite of products. So an easy example would be our cap table solution. If we are managing that company, i.e. the annual filings around it, or if they need to bring on new shareholders or remove a director, whatever it is, we do all that management through the Clara platform. But we can also introduce them to the cap table solution, and they can manage all of their equity through the system. So for example, if they wanted to create an employee share option plan or an ESOP, they can create that ESOP on the system. And when they go to distribute equity under an option grant agreement, they can sign that option grant agreement through Clara. And the cap table automatically updates with all of the vesting dates, all of the exercise prices, all of that. It does it all for them. But
that's convenient.
It is turbocharged from a user experience perspective if we manage the entity, because it's not just a matter of doing it digitally on the platform. There is still a record update with the relevant government that needs to be implemented to ensure that the legal position is accurate. So just updating a digital cap table solution doesn't actually mean, for example, that you've legally issued shares to someone. In most jurisdictions around the world that investors prefer, a deal has not been closed until the government record displays the new changes. So it's not just a matter of doing it digitally on the system. Delaware is a bit of an outlier in this.
I think it's the equivalent of don't celebrate the deal till the money's in the bank, is like don't celebrate their shareholding until the government acknowledges it.
Correct. The government has to spit back the new register of shareholders or register of members to say this is the official position now, at which point the deal closes, or these are the members of the board now, and then the deal closes. So with that acquisition, that allowed us to add a whole bunch more companies into our system. And whereas both could only provide them with the basic kind of company management services, and they did a great job at it. Once we brought those companies onto Clara, we can now introduce them to all the adjacent products that we offer: document automation, cap table management, data room management, and all the way through. And this is a growth channel that we are continuing to execute on and will continue to explore across the range of jurisdictions that we focus on.
And that was the picture at the end of 2015, was an angel investor group that was frustrated by a company that was pulling in good revenue, but wasn't growing as quickly as they wanted it to, running out of money faster than they wanted it to, and was telling them a slightly modified story every 2 to 3 months about what the real service opportunity was and who was interested. And I promise I'm going to land this airplane soon, Cam, in terms of our finding story and how we got to macro. So you can imagine that in that scenario, I'm kind of fairly keen to please our customers, right? Our clients. I was doing weekly hypercare visits to the existing clients that we had, essentially asking, is there anything you're not happy with? Don't leave us. We're trying to raise some money. Really, like, obviously wouldn't say that to them, but the subtext is like, if they were to leave us now, we would be so screwed. Because to tell a story about needing to raise money while also having the context of one of your founders leaving and your clients leaving, it's kind of a hard tail to swing. So in one of these hypercare visits, I visited one of our clients called SA Florist. And at the time, in the office visit, I kind of dropped in unannounced. There was a guy called Colin Fleming, who was the head of Massmart e-commerce at the time. And he was talking to them because he was interested in acquiring either their technology or them as a company, because his vision was he wanted to build Massmart as a marketplace business. SA Florist architecture was a marketplace. Whereas Net Florist is centralized, SA Florist at the time was aggregating supply from various florists and having the products delivered directly to the clients. And that's where we came in. So he was talking to them, and I suppose, just by dint of the classic entrepreneurial young founder thing, you kind of want to tell everybody about your business. We got chatting, and he liked the cut of our jib. And unbeknownst to me, he went back to Massmart, and he told Massmart about us, put us on their radar, and essentially pitched for Wumdrop to be acquired by Massmart. And that idea was parked and shelved. The timing wasn't right for Massmart. Massmart, though, had been acquired by Walmart. And every June or July, there is the Walmart shareholders conference in Arkansas, in Bentonville, in the headquarters. And the Massmart leadership goes by dint of the fact that Walmart owns them. And Doug McMillan, who's the CEO of Walmart, was the new CEO at the time, and was talking about something incredibly important to Walmart that was going to help them fight back against Amazon, which was final mile delivery. And he presented about that pretty much all week, and so did a senior leader in Walmart called Sylvester John, who was building something called Walmart Spark, which was essentially Wumdrop for Walmart. Same model, a delivery as a service business that made use of a network of independent contract drivers that executed on the client's behalf. And in that case, the client was just Walmart. And he was building this business, and it was doing incredibly well, and was adding so much value for Walmart. So Massmart's leadership came back to South Africa with the idea that they needed a final mile business. And the feelers went out to us. And although 2015 had ended on the note of incredible foreboding, by 2016, we had an offer, actually on my birthday, 4th of November 2016, we had a firm offer from Massmart. Yeah, it was great. I've never been so happy driving to Cape Gate Macro. For that we had a firm offer from Massmart. Mass Stores, which is Macro, was going to be the entity acquiring us, because it was while they were kind of all in the idea, they obviously were managing some risks. They were having one of the smaller businesses buy us. So Mass Stores bought out our angels. I didn't get any money off the table. Neither did Roy. But that didn't matter to them because they were buying majority control of the business by buying out the angel.
So, Greg, just to, I guess, the first glaringly obvious topic, right? One Spark, now Dis-chem Life. Talk to me about that.
So, yeah, I mean, look, it's something I'm very proud of. It's for the company, for the team, and you've got just such an incredible group of people who built this company around One Spark with an incredible vision, to kind of really bring technology and insurance together and make real change in South Africa. That's really what we wanted to do, and that intersection. And obviously moving into the Dis-chem Life and Dis-chem world, it has just allowed us to scale at a rate and just really push what we want to do at scale so much quicker. It's just a really, really exciting time. So yeah, in a nutshell, I mean, that's where we are. It's just everything's kind of, I wouldn't say new, but very exciting again. Almost feels like I'm at the beginning all over again. So that kind of excitement is definitely there. But yeah, just a really good time for the business.
Yeah, it is a really exciting time, man. I think the possibilities that this opens up and the excitement that you must feel must be incredible. But I think we'll save that story for chronologically when we get into it. But it's just tell me a bit about the acquisition and the rebrands. Just let's get some context on what's actually happened here, and then we'll dive into the business and the scaling journey.
Sure. So I think, look, in terms of what actually happened, I think, and maybe to tell the story, you've got two companies which had so much in common, running kind of completely in silo. You had, and I need to explain. So One Spark, is an insurtech company built on a chassis of real tech innovation. We've removed so many obstacles and made life insurance so much more convenient, instant. I mean, we're living in a now generation, bringing the cost down, all those things, and really using our tech and the simplicity of product design, because people don't really understand the market, how things work and stuff like that. That's what we really did there. And a founding mission statement to fundamentally help South Africans. For me personally, why I started the company, my driving force was that I could never accept that I couldn't push South Africa in the way that I wanted to. Something is very, very important in terms of helping ordinary South Africans. I love South Africa. And, it's why I moved back from the US to come back and start the business here and push and everything. And I'm happy I did. So that's one thing. So how it all happened. And then you have Dis-chem, a company which, granted, very much a lot older, a lot more established, but the founding kind of core principles around innovation is there, right? Driven by innovation, driven by a team who wants to push forward. Within the kind of core strategy now is to actually make healthcare accessible and affordable to as many South Africans across the board. It is such an incredible goal, right? So when you look at that of innovation, when you look at it of genuinely helping ordinary South Africans and doing something so good, I mean, the two things that change society are education and healthcare. Like those are the two things, fundamentally. There's other things, but those are main things. You get those right, you can fundamentally change your country. Basic needs, Maslow's hierarchy, exactly, Cam. And so for me, when you look at that synergy and you see kind of the distribution, you see the innovation that, Dis-chem want to do, you see the genuine help that they want to do, for ordinary South Africans. And our mission statement is around that. It really was it was an incredible, I even remember sitting in that boardroom for the first time and pitching, and I was just like, this makes so much sense in my head, And that's kind of how it started. And it's been an incredible journey. It's been almost 2 years since we had the first discussion, obviously launched about 2 months ago. But the synergistic relationship and kind of the vision of both teams, it's incredible. So, I mean, that's at a high level. But yes, that's kind of how the two worlds came together.
Yeah, awesome, man. I can't wait to get into the details. Obviously, we just need to get a lot more context in terms of how you got here before we get into that. But one thing that stood out to me is just I love how pumped you are about Dis-chem, right? And the reason why I say this is because we look at many corporates in the world, in South Africa as well, and they're very dehumanized entities. But you're so inspired by what they're doing. You're so inspired by a shared vision and mission. And it's just great to hear that. It gives me a bit more, I just got a kick of like hope about South Africa and where we're going at a corporate level, also at a startup level. So yeah, thank you for sharing your passion and inspiration with us.
I think first of all, likewise, guys like you have incredible South Africans that are still prepared and still want to fight and still see, a better future. And I love that. And when you talk about innovation and passion, I think you also got to look at the Dis-chem leadership team. Cam, I don't know how much you know about it, but they're led by an incredible leader, Andrew Roy, who's a guy who will go up on stage and wear sneakers, at an event. And so talk about, innovation and pushing boundaries. So it's not that typical corporate feel. And when you start digging deeper, like the tenacity of the Dis-chem team is unbelievable. The ambition, like how we gel and how we work together. I think that's given me a lot of that has allowed us to actually just kind of bring our goals just so much quicker and allow us to kind of innovate further. So it's been an amazing journey.
Oh, now with the situation of rebranding into Dis-chem Life, right? And moving into that I've obviously got a whole bunch of other questions. We're going to get back in the path of enthusiasm, but now just like on the part of culture, right? Is like you've now integrated with a very large corporate. And I think that to where we started right in the beginning, is the fact that when you've got great people, you've got really capable people in terms of leadership and the board support of Dis-chem as well. You've got a shared vision, shared missions. Like you really want to improve healthcare and the distribution of that within South Africa. So like there's that motivation to begin with is there, but surely there's some kind of culture change. Surely there's some kind of org design change in this process. Like help me understand what the impact of that was.
It's again, you bang on with your questions today. So it is, and any founder going through kind of this kind of change, it's very, very interesting. And traditionally you would think, a corporate and different, but when I just want to talk about Dis-chem. When you look at innovation is one thing, and you look at the kind of, and this is if you don't know anyone from Dis-chem, right? And you go and look at their strategy, and it really is, it's to broaden healthcare, as you said, and it's a very powerful thing. As Dis-chem, as a company, as a brand, they really want to make as much change in South Africa and help South Africa, and that resonates, right? And the reason I'm saying is before I went and I understood what they stand for as a brand, as a company, but the reason, one of the massive things that allowed the two companies to gel so well is the synergy between teams, okay? And the team that we work with on a day-to-day basis, young, dynamic, ambitious, tenacious, same goal. And the reason why it works so well is because our North Star is exactly the same, right? And all we are both focused on how we get there together, how both companies, how both arms work together to get there. And I said this now, Cam, I'm a bit of a perfectionist. I'm definitely a type, and I like getting things done. So, I as I said earlier, I'm the kind of person, my inbox is 0 every day. I respond to everything I get back. So I try not to be the bottleneck, because it's just I guess it just wouldn't say, well, I couldn't go to bed. I would be too I have to reply. Good and bad. But the reason why I'm saying it is when I started working with the Dis-chem team intricately last year when we started, I almost want to say I met my match. Like their team is busy. Like I would send an email at 11. They would send at 11 and 2 minutes pass. And then I was like, oh my God, I got to reply, because I need my inbox at 0. And you get into this thing. And the reason why I'm telling it is that when cultures are so aligned in terms of ambition, in terms of the way we work, it's been an amazing journey. And we pushed each other ahead. Like as a company, as Dis-chem Life, as One Spark, we are like, we would go and say, we want this. And they would say, we want this. And the solutions are just so brilliant. So to be honest, it's been an amazing journey, and it hasn't changed much, right? We driving a lot of the direction alongside our partner. We just both want to succeed. So everything's in the best interest of that North Star. And when it's there and the teams are so aligned in culture and everything, like it's been a really, really easy transition. And it's something that probably a lot of founders would come up here and say because they have to, but genuinely in our case, it's really worked and they're amazing. They're just so much fun. So it's a really good place. And that makes a difference, because if it wasn't like that, then, some companies may struggle.
Yeah, I think what's really surprising me from this conversation is that when the perception that a lot of people in startups and small businesses view corporates to be is these like archaic bureaucracies, super slow. They don't even know what innovation is. They don't even know how to do it and think about it. And it's like, and this is just like the bias that a lot of people in the startup world have. But the way that you talk about it is like, it sounds like the partnership was a no-brainer. Is that when you had those conversations at the table, you realized how aligned you were. You see these behaviors. It's like we work the same way, right? We operate in the same way. You show the same level of intent. Like there's similar levels of capability and drive and desire here. Like I don't feel like I need to radically change as a founder or as a leadership team, and we just get one another. And like, sure, like that's obviously sort out the details. And it's going to be a lot more complicated in the process of that, but like it makes it easy for you to want to do this.
Cam, you hit the nail. I'm literally getting goosebumps. And I it's funny because I'm almost taking a step back, and I'm really enjoying this interview and talking to you, because it's allowing me that we launched crazy work. You launched a couple of weeks ago, and like it's the first time this is actually the first time I'm starting to take a bird's eye view. Be like, oh, that actually is really cool. So thank you for that. That's kind of that unique moment. But
I'm grateful that I could share in this reflection with you.
No, and I appreciate, like, I actually haven't taken the time to do it. So I appreciate that. And I think for me, it's a large degree down to the team and their leadership. And again, like, I don't know how much you know about the Dis-chem. If you look at, the CEO, and I briefly discussed it with Roy. Roy is just brilliant. The way he thinks, the tenacity and an ambition that he wants to drive, and it filters through his team. The team below him are brilliant. They carry out that vision. So it's very similar structures with us. We got a very strong leadership team who believe, and again, that's why they work so well together. And it's the dynamic that makes it very easy. So I can't speak for other corporates. I can only speak for what I know here, and it's driven from the top down. And we're very in sync with what we're trying to do and push boundaries. And that's why our North Star is so aligned. So that's what makes it very easy. And that's why we will be very successful in what we do.
And yeah, I love the emphasis with which you discuss this, because again, as someone who's a strategist, strategic thinker, but also a psychologist, I've known for a very long time how important these intangible statements around vision, purpose, mission, direction, strategic intent, like there's all these different labels for it, but the clarification of that, it really accelerates the ability to say, are we on the same page, right? Is there just a fundamental level where, like, I don't need to question whether or not we're on the same team? And that allows for not just the driving motivation, but you just need to figure out the how, right? Like the thing is, Simon said a cynic will some people give him a certain ramp, but he really is spot on with this.
But there you go. You nailed it. And again, the last thing I'll say, and again, you being a psychologist, you have to enjoy the people you work with, right? And obviously, we have a very interesting dynamic, and we have our company that now transition, but a whole new other company and the people, and yeah, we're very fortunate. But again, as I said, when I sat in that first time we pitched, the synergy was just so good, and what we aligned, and the vision, and at Dis-chem, this is intricate to kind of making healthcare and broadening healthcare to society. Through financial services and primary health, it really is part of their strategy, and it's part of our strategy, and it works very, very well.
What was that first conversation like where the idea was, it's like, I think we should merge companies, I can't admit that didn't just happen. It was like, oh, I think you and you should merge. When did that idea come about, that it was like, I think it's the right idea for us to merge companies? Like, what was that moment?
It was partly actually because we were in this market that was just really negative. And you have to think about coming up with creative ways to grow, to enter new markets. And I mean, we always wanted to enter the European market. We had worked for a very long period of time. Now I'm talking from the world of Revex, working with a bank in Germany. So we were going to operate underneath their license. And then that landed up falling apart for no other reason other than they were looking to be acquired by another bigger crypto exchange. So they had to stop engaging with us. We had looked at setting up in Malta. We had looked at setting up in Liechtenstein, sort of going across a whole variety of different regions. So Europe was always a big focus for us. So we saw this opportunity where we said, okay, well, we want to end up in the European market. It's just how? Do we have to merge with someone? Do we have to be acquired? Do we have to acquire another firm? What does that look like? And then just, I think by coincidence, right, one of our investors then connected the two dots here. And that was the start of then a much bigger story. And then it started to become like, okay, they're sitting with a fair amount of cash ultimately on their balance sheet. They've got, a much smaller sort of customer base. They've got a smaller sort of staff complement. We can look at getting quite a lot of efficiencies by bringing these businesses together. And that was one of the bigger motivations as well. So we were going to inherit about 25,000 European users. We would get a European licensed firm ultimately, which is, not a cheap endeavor if you were to go down the road of getting that yourself, and certainly not something you can get accomplished very quickly. We'd get some phenomenal talent because they did have some really good employees, and, we want to bring those individuals on. And we were able to then effectively start afresh. And I don't mean this necessarily to walk away from anything on the RevX front, not at all. That was what actually my biggest concern is. I was very concerned that it would be seen as if we were sort of running away from any of the past problems. And that's not what happened at all. I mean, we kept the sort of RevX brand dealing with that hurry-related issue, but we said that we'll have Altify that is formed then that is more centered on alternative investments. And we had to enter this new world of real-world assets and private market investment opportunities. That's the big focus going forward. And, the investors or the shareholders at that point in time, they really bought into that. I felt really fired up about this. You can imagine it's also been sort of a roller coaster at this point in time for a good couple of months. And now all of a sudden you're seeing some light at the end of the tunnel and you're going, okay, this is something that, I feel really passionate about. And that was, that was, I guess, then what led to the next step, which was actually getting this done.
So talk to me about this evolution and new vision of the alternative asset class. Like, how did you have this conversation with the other founders in the room? I've got a whole bunch of questions still about like how that dynamic would have shifted, but just around just the new concept of a business, because it's like, it means all three of us need to scrap what our businesses have been for what this business will be now. I mean, that is how a merger works, but it's different to like the fundamental nature of the business is changing, right? Like everything from what we're offering, yes, we might be going after a similar marketing customer to what we were doing previously, but the offering to them is radically changing. Like it's a different business. How did you handle those conversations? How did you get to the point of alignment and realization that this is the path forward? Did that come from you? Did it come from debates and discussions? Was it like flying to Austria to have this chat? Like take me through the detail of like how this formulated.
Yeah, I guess to start with, I mean, if you bring both businesses together, the question was, okay, do we remain RevX, or is there the brand Companion that continues? Is it perhaps Bitfund? What do we do on that front? And I think something that I'd been thinking about for a really long period of time is just how you would see the private market space get democratized over time, and something that, and this is an area, of course, that I'm very passionate about. And I was saying, if everything had to just stop tomorrow, and this was part of my reflection process over many months, and this was based on, I don't even know how many conversations, right? And yes, flying to Vienna as an example, having a chat with some of their shareholders, guys that were incredibly successful, so, sold 100 million euro businesses. And having these discussions, getting feedback, in some cases disagreeing with the feedback, some cases agreeing with it, kind of working your way towards what then ultimately would be this story with Altify. I mean, that was the entire journey ultimately. But I just knew that if I was going to stop everything and I was going to start something new, I kept asking myself, what would that new thing be? Because it's the thing that you're going to be the most passionate about, and it's the thing that you're going to believe is going to work the best in the market. And it was really that sort of, I'll call it like a first principles approach, but it was that fundamental view of, okay, how do we make sure that whatever the direction is that we're going for is going to have the greatest product market fit possible? Because when you're playing in a market where you've got a strong pull, like there's, that's half the battle won. So that was the one factor. And then the second factor, of course, needed to be that you had a team that were able to build in the space. And I thought that there was a really nice transition to go from digital assets to private market assets. And I think something that I haven't mentioned earlier in this is that we're not just focused on your traditional private market investments. So you're not talking about like a private credit fund that is offered to an investor. All of the products we have are tokenized. So they're digital assets. And I guess that's a key ingredient, because you have to have that sort of blockchain, crypto native sort of infrastructure in place in order to offer any of these products. So we had the perfect tech stack at the end of the day to be able to move into this direction. We also had team members that understood this digital space, and I knew we could bulk up the team with more traditional alternative investment managers. So, in short, it definitely wasn't a straight line. I think we went even, as far as to go into the B2B space to start with. We started going down that B2B route, I even put together a B2B pitch deck, right? This is where the merged businesses would offer our technology in a B2B format to wealth managers and financial advisors. And that's just
like white labeled,
like effectively a white labeled or API based solution. And pitched, I think, to several investors about this. I think my first pitch actually to the Coinpanion investors, like the vision that I had for the business at the end of the day was this. And a lot of them liked it because, B2B is just seen as easier than B2C in many respects. And I think to some degree that's probably true. But at the end of the day, that wasn't really where my passion was. And, after a lot of, thinking about it and going, okay, where's the market that we can win in? And what's the space that we can win in? I said, no, the B2B side is probably not what's going to work best. Went out, rebuilt a pitch deck, rebuilt sort of a business strategy that was more B2C focused. And that was Altify, ultimately.
Epic, dude. The benefit of having a good story makes you a good storyteller as well. But you are a good storyteller too. Appreciate the share. Talk to me about the power dynamics of handling this between a bunch of CEOs and founders of other businesses, and how the decision came about that you would be CEO. I can't imagine that was a straight line either.
To be honest, I was so lucky. So Bitfund had made the decision that they weren't going to continue. And it was kind of, what would they do? Would they sell the business to somebody else? Would they just shut down and do nothing? And so that engagement with that team was a lot easier. So at the end of the day, that was, we'll be taking over your customer base and we'll take over some of your IP. And that was the end of that. That engagement went really well.
That's more of an acquisition than a merger.
More of an acquisition than a merger, but all part of that same sort of merger transaction. And that's why,
sure,
it was all sort of bundled together. If something is hard, why not make it a little bit harder, right? In hindsight. And then with Alex Voltanger, the CEO and founder of Coinpanion, he had also fortunately made the decision that he wasn't the right individual to be leading this business. And I think it was the right decision, not because, this guy's remarkable from a founder perspective. Like, he is the kind of guy that goes, there is a problem, I'm going to solve it. And he will do whatever it takes to solve that particular problem. But when you start going from earlier stage business in the tech space, because that's really where, both Relix and Coinpanion were, but now you're going into the regulated financial services space, you need somebody that is very passionate about investing, very passionate about building financial technology and compliance and all the rest. And he definitely wasn't the right fit for that. And he had that honest conversation with me where he said, listen, I'll come in and perhaps fulfill a strategy role for a period of time. And he did. He came in and he supported in that strategy position for a while. And then he went off and actually started another business called Heimzer, based in Vienna. And we're still on very, very good terms. He's on our board. So, things ended there in the best way possible. But I can imagine that it would have been significantly more difficult if we were going to have a fight over who's going to be the CEO and who's going to be making ultimate decisions. And I've got to hand it to him. He was remarkable in this process. For him, it was also giving up my business, giving up the entire brand. And I'm now having another CEO that's going to be calling the shots. And he respected every decision I made. So I couldn't have asked for a better transition in that respect.
Yeah, that's amazing, man. I think the level of humility on his side to admit that I'm not the best person to do this is that I think without that humility, there's still the other side of being a founder and being the problem solver of, and it's not even the ego that comes in. It's actually about the fact that it's this, my job, I should be doing this, I could be doing this, I could be having this problem. That's a hand over the authority for someone else to make a decision, but also to give them the veto rights over to not go ahead with your decision or your thinking is really hard. It takes a lot of self-awareness, I think, to do so. So you definitely struck gold, pun intended, on making sure that you found the person that you're going to merge with that level of humility.
Without a doubt. No, I was incredibly lucky. And, I think the other weird thing is, right, when you go into a management role, and I'm sure this will resonate with a lot of people, but when you go into a management role, you also realize how amazing it is when you've got somebody that just, does work in a remarkable way. So they take initiative, they ask questions when needed. And I'm now being very idealistic. They report back when required, but they're just that trustworthy individual that you're working with that you go, this person's low effort and they're remarkable. And Alex, I think, had seen enough of that. So what a remarkable individual looked like because of the team members that he was working with. And then of course, what sort of the opposite looks like, to be able to get into that sort of position and be like, Sean, I'm here to support you. What do you need? And just ask some really good questions. So yeah, I agree. I think the self-awareness and humility and all the rest was, it was off the charts, was incredible.